let's be real, most self-employed folk will bust their backs in 2025, paying the IRS way too much, and then complain about how the system is unfair. But here's the truth, the system is not unfair, you're just not using it. Congress just handed you one of the best write-offs we have ever had back, 100% bonus depreciation. That means instead of waiting years to get your money back from the IRS, you take the deduction up front. And no, this isn't some scammy loophole. This is literally written in the new big beautiful tax bill that will drop in July 2025. If you are a Schedule C filer and if you are self-employed, this law is a gift, but only if you actually use it. Stick with me because by the end of this, you will know what changed, who qualifies, how to stack it with Section 179, and the playbook for 25 and 2026 that can save you 5-figure in taxes. Aloha, I'm Nia. I have spent more than 15 years helping entrepreneurs and business owners build smarter systems for money, taxes, and operations. And a quick disclaimer, this is education only, not tax, legal, or financial advice. Your situation is unique, so talk to a qualified professional before you act. All right, let's dig in. What is bonus depreciation actually is anyway? So here's the no BS version. Bonus depreciation let you write up to the full cost of qualifying business assets in year one. Normally, the IRS make you stress it out. So it could be 5 years for a laptop, 7 years for furniture, 15 years for improvements. So they like slow. So bonus depreciation is fast. You deduct it all right away. And unlike Section 179, it's not limited by your income. And Section 199 say, cool, but you can deduct more than what you make. Bonus depreciation says, send it, even if I create a loss. Why this update matter now? Here's the change under the new big beautiful tax bill that was signed in July 2025. We are back to 100% bonus depreciation starting January 20th, 2025. So the keywords here are acquire and place in service on or after January 20th. If you lock in a contract before this date, sorry, you are struck with the old face down. And if you rush to place something in service between January 1st and January 19th of 2025, you only get 40% bonus and 60% if it's a long production property. So the magic window starts January 20th, 2025 and going forward is in full power again. So who this section would help for our Schedule C filer? So why should you care, right? If you are self-employed, that's you. So freelancer, say for example, the $5,000 MacBook, now you can deduct 100%. The $12,000 camera kit, or a new software server. For contractor, it could be trucks, trailers, powerful tools, generators. For service provider, it could be office furniture, printers, tech gear. And for small manufacturers, it could be $200,000 machinery that actually make you money. If it's tangible property, depreciation, and use for your business, odds are it qualifies. So why should you care? Let's do some money math. So because this is where it gets real, right? Say you buy a $50,000 worth of equipment. That's where you want to deduct the big boys, right? Not the little boy, the $5 notepad. So without bonus depreciation, you are stuck taking maybe $10,000 a year for 5 years. With bonus, the whole $50,000 in 2025. So at a 22% tax rate, you would save about $11,000 now, but not 5 years from now, right? Look at another example. So say if you buy a $20,000 of machinery, but your Schedule C is only sold $120,000 profit. If you have used Section 179, it would cap you at your income, which is $120,000. But if it's bonus depreciation, you can take the full amount, the $200K, so that create an $80,000 loss. So that loss carry forward to wipe out future profits. So that's not a write-up, that's a strategy. Here are some key rules that you can ignore. Do a quick reality check. It has to be tangible property with a class life of 20 years or less. It must be acquired and placed in service after January 15, 2025. So both of these matter. New and used are both qualified. And yes, you can create a net operating loss, and yes, it's legal. So let's think about 2025 and 2026. What kind of tax plan can we do? So here's how you actually use it. First, you want to time your purchase after January 20th, 2025, so you're in the clear. Secondly, you want to stack it with Section 179. So Section 179 first, up to your income, then bonus depreciation to handle the overload. Third, you want to finance smart. You can finance a truck and still deduct 100% up front. The IRS doesn't care if you pay cash, they care if it's in service. Fourth, play the long game. If 2026 is going to be a high income year, maybe create a 2025 loss to carry forward. Fifth, entity awareness. As a Schedule C filer, it's flow right to your 1040. If you switch to S Corp, planning ship with payroll and pass-through rules. Let's talk about some bonus planning tips. So here where it gets fun. So use gear counts. Don't be afraid to buy secondhand, it still qualifies. There's a missed quarter trap. If more than 40% of your assets are put in service in the last 3 months, the IRS make you change method. So spread out your purchases. You want to also stack with credits, say EV, truck, solar, green improvements, so this credit and bonus depreciation. And let's look at state mismatch. Some states like California don't conform with the federal, so you will get it in the federal level, but maybe not at the state level, so you need to plan ahead for that. So don't wait forever, the law change, so use it right hard. Let's talk some real case studies. Let's look at an example as a freelancer that buy a $12,000 camera kit. So normally 5 years before for regular depreciation, right? But with bonus depreciation, you can deduct the whole $12K this year. Let's look at another example. Say a contractor buy a $90,000 truck. If it's over 6,000 pounds and you're mostly for business, so you can deduct the whole thing. If it's under 6,000 pounds, the cap is about 20,200. SUV between 6,001 pounds to 14,000 pounds. Section 179 has a 31,300 cap. So bonus depreciation can cover the rest. Let's look at manufacturer. Just say you got a $400,000 on machinery and make $200,000 of profit. So you can deduct all $400K, so create a $200K loss. That's not carry forward. So let's look at some frequent asked questions. Do you have to choose between Section 179 and bonus depreciation? No, you can actually stack them. Can you deduct your personal car? Well, only if the business use percentage is what you can deduct. So you want to track your mileage. Don't BS about it. Does it work on used gear? Yes, that's why people love it. Why you should listen to this, right? Here's the truth. Most self-employed taxpayers don't plan, they react. They buy things in December, hand receipt to their accountant, and hope for a refund. That's not a strategy, that's leaving money with the IRS. Bonus depreciation is a tool to take control of timing It's about accelerating deductions when you need them, creating losses when you can use them, and keeping more money in your business instead of letting the government borrow as interest-free. That's why you should care. If you want to run the number for your own situation, I build calculators and worksheets that compare bonus depreciation and Section 179. Grab them at my Etsy shop at Pro Deductions on Etsy. And if you want to go deeper with full workshops, example, and tax planning strategy for the self-employed, check out assetyinstitute.com. Links are in the description. All right, I want to hear from you. If you could deduct 100% of something for your business this year, that's first on your list. You can comment truck, tech, equipment, other. We got more big beautiful tax bill strategy coming for the self-employed and landlords. Hit subscribe so you don't miss the next one. So to wrap this up, bonus depreciation is back at 100% starting January 20th, 2025. For Schedule C filers, it's one of the most powerful tax planning tools you got right now. And remember, this was for education only, not tax, legal, or financial advice. Thanks for watching, and I see you in the next video. Mahalo!